This is The Market Capitalist, and I am Domenico Johnston. Welcome to the new year. Happy 2011. I hope all your investing goals, as well as mine, are realized this year, and we're going to get started with an actual investment pick from yours truly. Telefonica, I mentioned it back in, I believe, July of 2010 as a pick that I thought was an undervalued company with a lot of potential. When I mentioned the stock, actually it was on another site and it was also on my site, it was trading in the upper 50s. And since then it's gone to the 80s and then it's fallen back now to the high 60s. So what I see here is it's pulled back because of some of the concern or weakness in the Spanish economy where it is based. But again, this is an international company. So even though it is based in Spain, it's beyond Spain at the same time. So what I like about this company is that it's pulled back, and therefore the valuation, the price to earnings, has dropped into the single digits again. And its dividend yield is over 6% again. I think it's at 6.3% currently. Really nice dividend yield, annual dividend yield. Company has a value component with its business in Europe, stable business, mainly land-based phone service, and then it has the growth component, which is the South America and Central America business, mainly cellular phone service, and the company's focused on acquiring that market. They have a forward-looking vision to grow in South America and Central America, which is great because what it's doing for you, the investor, is essentially allowing you to get in to a company that has many value characteristics of a value stock. Therefore, increased stability, that dividend yield that we talked about, that low PE ratio, it has those characteristics. At the same time, it also is a company that has a lot of growth potential because you have huge markets in South America and Central America that, if you're of the opinion that these economies are going to further develop and the people in these economies are going to become wealthier, they're going to adopt the services provided by Telefonica at greater and greater rates, therefore benefiting the company. So you have kind of two components here where you have value and then you have growth. And it's kind of like the best of both worlds. Yes, I can get this great dividend yield, but I'm also going to potentially benefit from a significant growth factor within the company. And what does that mean to you, the investor? It means it's going to put pressure on the stock price to increase. So right now, the stock's gone from the 80s down to the high 60s. I think it's a good time to enter into the stock. I actually don't have a position yet because what happened was I recommended the stock. I was convinced in my argument that it was a good choice for an investment in July of 2010. Shortly after that, it kind of took off and went up into the 80s where I thought, well, I'm going to wait till this thing pulls back. Right now, it has pulled back, and I think it's a good point to enter in. Again, I'm always evaluating my investments, what I currently have, and what funds I currently have to work with, and then I make a decision based on my opportunities and what I currently have to where I'm going to allocate my funds. So it's definitely on my short list in terms of what stocks I would like to allocate my funds that are available to right now. Again, check out Telefonica. The symbol is TEF. It is a telephone company providing telephone and associated services in Europe, South America, and Central America. Mainly Portuguese and Spanish-speaking countries, but it does delve into other areas of Europe that aren't dominated by those languages. Again, thank you for tuning in. It's 2011. Hopefully you've kind of outlined your goals in terms of what you want to accomplish this year for investing, and I hope you reach them as well as myself, and we'll help each other through it. So thanks for tuning in. Comments below. Always welcome.